Foreign banks and diplomats were coming, and they were demanding gold. The U.S. simply didn't have enough. What were we to do? We interrupt this program for an important announcement from the president. Richard Nixon had made a unilateral decision, and it was so important he chose to interrupt Bonanza to address the nation. Essentially, Nixon had declared the following: dollars could no longer be converted to gold. It was the end of the gold standard. Nixon promised that his decision would stabilize the dollar, control inflation, and ensure that the U.S. would remain a pillar of the world economy. The result was a bit more unpredictable. You could even say messy. So why in the name of Fort Knox did Nixon do it? It started with the gold standard established back in 1944 in Bretton Woods, a small part of a tiny town in the little state of New Hampshire. Yet in this tiny place, the entire world economy got anchored to the US dollar, which in turn was pegged to gold at a fixed exchange rate of $35 per troy ounce of gold. As always, if you're getting some value, like this video and crush the subscribe button. Under the Bretton Woods Agreement, which the US was able to strong-arm, the entire world would look to the US dollar as the reference currency. Foreign banks could theoretically exchange their dollar holdings for gold at any time. This made the US dollar as good as gold for a time. Problem was, this was based on a fractional reserve model. In other words, there wasn't enough gold in Fort Knox or elsewhere to equal the amount of dollars in circulation. Too much money printed, too little gold mined. The idea was to make all the gold theoretically redeemable, but hope it would never happen. Could be a problem, and it was. France, Switzerland, and others began lining up at the gold window with a pocket full of devalued dollars. They started to make a run for gold, redeeming it to the tune of hundreds of millions of dollars. Nixon feared that more countries would line up to collect their gold, depleting the central reserves to dangerous levels and further destabilizing the dollar. Several other factors were also at play. Deficits were snowballing, exacerbated by Vietnam War expenditures. Meanwhile, unemployment and inflation were both at over 6%, and Nixon's approval rating was faltering as re-election was looming. These were likely the primary reasons Nixon decided to interrupt Bonanza in August of 1971.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
What happened immediately afterward is that American morale improved and the Dow rose by a large margin. Nixon was eventually re-elected, but after the gold dust settled, the dollar slid in value even more. Around 1975, inflation was at about 11% and unemployment was at 9%. Stagflation had arrived. By 1981, gold was worth nearly $900 per ounce, compared to $35 per ounce back in 1971. The federal funds rate was an incredible 20%, and inflation was 13.5%. This would be followed by a few recessionary periods in 1990, 2001, 2007, and 2020. Could all of these problems have stemmed from Nixon ending the gold standard? This point has been a contentious one. Many believe the end of the gold standard allowed for the stagflation that followed throughout the 70s, as well as the dollar's volatility and devaluation. Others believe there is some merit to a fiat currency that is not tethered to a fixed commodity like gold. Such a currency changes in value based on supply and demand pressures. It allows central banks to control the supply of money rather than for the money to be based on a fixed amount of gold. The central bank can print more or less money to help control credit, interest, inflation, and unemployment. In actual practice, this doesn't always work out. This is illustrated by the dot-com bubble of the late 1990s and the specter of hyperinflation, which can result when the central bank's money printer gets stuck on, well, print. Some think cryptocurrencies like Bitcoin are a solution to these fiat currency issues. Others aren't so sure, as crypto has its own pros and cons. Bottom line, Nixon's decision may very well have contributed to market volatility and dollar devaluation, though there's no alternate universe to compare to in which he didn't end the gold standard. What's clear is that the decision was very shocking. What's not so clear is whether the global economy will require another change like it to address growing deficits, volatility, and inflation. What do you think? Let me know in the comments below.